Company also announcing plans to invest $75 billion in capex this year. That's a big revision above street forecasts. This is what the CFO had to say about that spending strategy on the earnings call last night.
As we expand our AI efforts, we expect to increase our investments in capital expenditure for technical infrastructure, primarily for servers, followed by data centers and networking. We expect to invest approximately $75 billion in capex in 2025, with approximately $16 billion to $18 billion of that in the first quarter. The expected total investment level may fluctuate from quarter to quarter, primarily due to timing of deliveries and construction schedules.
Jim, that's about a 30% revision higher. Meta's was only 20% revision higher.
You're listening to the call and you're thinking, oh, okay, it's pretty good. And a lot of good stuff here. YouTube is really strong and there's a lot of profit, a lot of money being made YouTube. And you get very excited. And then they just drop a total bombshell about how much they need to buy. And David, when I'm listening to it, I'm saying to myself, well, what happened to DeepSeek? I thought we all were supposed to be cut. Did we all just get had on the DeepSeek story?
Well, Jevin didn't get had. He knew. He knew. The 1865 economist back in Great Britain.
Yes,
we were talking about a lot last week, Jevin's paradox.
Yes,
because listen, I don't think any of us expected, and I think we said this last week, when we got the commentary from many of these companies that they would suddenly reverse their capex in some way. But I think what perhaps is a bit more surprising is the increases. You mentioned Meta's, which occurred on Friday, I believe it was, 60 to 65 billion. Microsoft, at least 80, probably 85 billion. Some say will go as high as 90 billion this year. And then you just referred to that significant increase in capex from Alphabet to 75 billion. The numbers are stunning, obviously, and they all point to potentially an overreaction, I guess some would argue, in what happened to Nvidia's stock price. I would add to that, Jim, that Alphabet shares are going to be down in part because of the deceleration of the growth rate of cloud. 30%, yes, still a very strong number, but not as strong as it had been. But what do you make of the comments on the call when the CFO said the cloud misses due to being supply constrained? More demand than available capacity. Doesn't that say good things for NVIDIA?
Yes, it does. It says great things. Now, what people are still concerned about is, if you notice in the verbiage, that they're going to be the first to sell Blackwell. Well, wait a second. I thought Blackwell was selling like mad. So that was a pause. Second, we have one more in this gauntlet. Will Amazon say that they're going to pause? Why didn't Alphabet say, you know what, we're in light of DeepSeek, we're going to maybe pause our spend? But they couldn't, because they're an honest company, and Ashkenazi, who's the CFO, is not going to let them do that. I mean, Carl, we sold down Nvidia because of a belief that you didn't need all this capex. So far, everyone has said they do. Amazon's the one that has the most that they're working on that's away from Nvidia. But if Amazon says, you know what, we're going to need to do capex, then Nvidia's going to go up rather dramatically.
Amazon's going to be key Thursday night. Citi today, though, does trim Nvidia to 163.
I saw that.
They point out it's been flat since June.
Right. I mean, I read through that, and I said to the guys, I said to Jeff Marks and Ben Stoto, all right, here they go. Here come the downgrades. But the downgrades seemed almost out of sync. It really was much more of like, all right, this thing's not moving, so like, let's get away from it. It was not substantive. The only substantive thing I really found was that I keep thinking that Blackwell, which is the next iteration, is selling like mad. And to have the first customer learn that the first customer is finally taking it tells me that it's going to be much more forward and not now in front of us. But it's going to happen because obviously if you're spending all this money, you're going to get Blackwell. So then you say to yourself, why do you need Blackwell? Why do you need this incredibly important platform that has software? Well, you need it for both inference and you need it for training. There are people who said with DeepSeek you don't. Now, there's an outfit that I've been dealing with called You.com, and that's not Hugh Johnson, it's YOU.com. I really like You.com. And it's one of those companies that is really ahead of DeepSeek. It's way ahead. So I said, oh my God, this is going to hurt NVIDIA. And he said, well, no, actually, they're our largest investor. So, I mean, once again, you just find this. The long knives came out, whether it be China, whether it be Biden, whether it be these big hyperscalers that said, listen, we don't want NVIDIA, or we want to scale back in NVIDIA. And then something happened which just said, you know, I guess we can't. And then, AMD didn't help the case.
Yep.
Because AMD did not do well last
No,
night.
on data center in particular, those shares are looking down a bit.
Yes,
because the numbers did come in
And there we
below
get a
at
full
least
downgrade out of Citi today.
what
Yeah,
the
that
street
Citi downgrade
was
was
estimating
subsidy.
on data center for AMD. But I mean, just back to the bigger picture that we talk
Sure.
about often in terms of the incredible growth of data centers overall. I did think it was interesting in some of the commentary on the call from Alphabet, among the world's most efficient infrastructure as well. Google's data centers deliver nearly 4 times more computing power per unit of electricity compared to just 5 years ago, Jim. And yet the numbers just keep going like that.
No, they
Power
do.
consumption, everything else. And even with DeepSeek and the efficiencies that they may have come up with in some way, nobody's pulling back on saying, great, but we need more and more powerful chips, and we need even more electricity.
No one's saying it. I keep hoping that the glass replaces copper. That some people want to do that. I keep hoping that cryogenics from Dover replaces just the typical cooling product or water cooling product. Dover has to scale. The copper movement to glass is a very nascent one, actually led by a woman who's from Nvidia. So I keep coming back to, well, Nvidia's figured this out. But people want a price break from Nvidia. They do. And maybe a lot of this was, okay, Jensen Huang, while you're off there in the Lunar New Year meeting the president, we need a better deal because this thing's rumored to be $35,000. It's not a chip. We keep using the term chip. It's a platform with software. That was another thing that people missed on DeepSeek. Platform with software, they can charge more, and you can use the current plug it into the software.
Well,
but
I mean, if everybody needs it, then why cut the price? There's no real competitors.
Well,
and they all seem determined to just increase their compute capacity as much as they can. I mean, again, back to sort of the commentary.
Right.
Alphabet's cloud customers consume more than 8 times the compute capacity for training and inferencing compared to just a year and a half ago. 8 times?
No, I mean, look, when I talked with Jensen about Blackwell, I mean, Blackwell is video. I know that I talk too much about robots, and I know that. But if everyone gets a robot, which is the vision of the guy who runs Doge, then we would all need a lot of NVIDIA power, because NVIDIA has robots that don't walk into walls and aren't stupid. Let's go back to rewind the tape on why we liked NVIDIA so much. They were so far ahead of everybody else. Well, what happened? We found out that AMD has fallen behind. We found out the hyperscalers tended to need more than they got. We did get a DeepSeek story out of China, which said that they didn't spend a lot to be able to develop this product, which I think has now been proven to be false. That's not just a Peter Navarro narrative, an anti-China narrative. There was a sense that maybe the Chinese lied.
I don't know, Jim, on that one.
I don't
I've
know
also
either.
heard the other story, which is, well, it's actually very close in terms of what they actually spent to what is spent to train models here as well, that the differential is not that great.
Right. Okay,
So,
differential not that great.
Alphabet, the parent company of Google, which purchases Nvidia's processors, announced intentions to increase its expenditures on artificial intelligence, AI, on Wednesday, which caused Nvidia's stock to soar. In order to meet the demand for AI, Alphabet announced on Tuesday that it intends to invest up to $75 billion in capital projects this year, the majority of which will be used to develop its AI infrastructure, which includes servers and data centers. After revealing last week that its first customer was using Nvidia's Blackwell platform, Alphabet CEO Sundar Pichai told investors during the company's earnings call that the tech giant plans to maintain its strong relationship with the chipmaker. This might be advantageous for Nvidia. Additionally, the news was made only days after Microsoft stated that it anticipates spending $80 billion on infrastructure in fiscal 2025, while Meta Platforms stated that it intends to invest $60 billion to $65 billion this year. The artificial intelligence, AI, chipmaker keeps getting positive news. Nvidia's stock increased by as much as 5% on Wednesday. The stock was still up 4.4% at 12:42 p.m. ET. News that the artificial intelligence, AI chipmaker's processors will likely continue to be in high demand served as the impetus for the company's rise. Following Tuesday's market closing, Alphabet presented its fourth quarter financial report, and investors were eager to learn how the demand for AI was developing. The company's reported revenue increased by 12% year over year to $96 billion, resulting in a 31% increase in diluted earnings per share, EPS, to $2.15. Although the company's cloud sector results alarmed some investors, the results were generally in line with Wall Street's forecasts. Google Cloud's revenue increased 30% year over year to $12 billion, which was somewhat less than the $12.2 billion predicted by the consensus. Since the company started implementing AI in the quarter prior, management clarified that the shortfall was caused by difficult competition. Additionally, Alphabet is rushing to bring more capacity online since their demand for AI was higher than it could supply. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Got to have Nvidia up today. This to me smells a little bit more like it. Nvidia is winning and AMD is struggling at the time when there's this gold rush to, big investment spend, and their shares were already down, 33% over the past year?
Well, and the problem for NVIDIA is it's nearly in bear market territory. So maybe up a little bit today.
I meant
thanks
AMD.
to AMD's weakness, but it's still down a bunch.
Right. AMD is down, I think, significantly over the past year, while NVIDIA is up even today. So if that was a read through to the whole industry, you'd think, well, then they're selling off. Instead, Jeremy, it seems like they're sitting in the prime position here.
Yeah, I think the market's picking a winner. Right. And they're saying that NVIDIA, if 75 billion is accurate, again, because these are guidance and forecasts, and we've seen this movie before, right, is that Mark Zuckerberg during the metaverse area couldn't talk about enough how much CapEx they were going to spend. And then once it started to get hit into the stock, boy, that number changed really fast. And so those numbers are just guidance numbers that, hey, what we could expect. Those numbers could get, if DeepSeek ends up being something where there's efficiencies to be made, those numbers of CapEx numbers are going to come down pretty fast. So I think from NVIDIA, AMD point of view, I think they're just picking a winner and saying AMD is not gaining share against NVIDIA. NVIDIA is maintaining a lead, and the companies that are buying those chips are still saying.
Due to its restricted number of data centers, Alphabet is making large investments to address this issue. According to CFO Anat Ashkenazi, the company intends to invest $75 billion in capital projects in 2025, with servers and data centers accounting for the majority of those expenditures. Nvidia will directly profit from this increasing spending as the primary provider of the graphics processing units, GPUs, that drive AI in data centers. This comes after Microsoft revealed its intention to invest $80 billion in data centers this year, which will also help Nvidia. Additionally, Nvidia's stock is reasonably valued at just 28 times next year's earnings. Rapid developments in artificial intelligence, AI, the growth of data centers, and consistent breakthroughs in machine learning-powered autonomous systems propelled a broad spike in U.S. tech equities in 2024. Large numbers of institutional and ordinary investors were drawn in by this momentum. However, significant U.S. tech companies have had early difficulties as 2025 progresses. Early in the new year, market volatility has been exacerbated by the emergence of China's DeepSeek chatbot and a fresh round of tariff proposals from President Donald Trump intended to restructure international trade. Although it's never fun to watch your net worth drop, long-term investors have appealing prospects as a result of current market dip. I'm seizing the opportunity to purchase and hold on to one of the leading brands in artificial intelligence for the long term. Find out which are at the top of my list of things to buy this month by reading on. As of this writing, Nvidia's stock has fallen 13% since the beginning of 2025, but analyst projections indicate a whopping 49% upside potential over the following 12 months. Although confidence has been affected this year by worries over China's DeepSeek chatbot, Morningstar analyst Brian Colello says this is a healthy adjustment rather than a significant change. While enormous clusters of graphics processing units, GPUs, may not be as necessary thanks to DeepSeek's effective AI models, I see this leading to wider market expansion in certain situations. Similar to how the PC and cloud computing waves were sparked by falling processing costs, the optimization of AI infrastructure should hasten industry adoption. NVIDIA's superior GPUs and Compute Unified Device Architecture (CUDA) software, which has emerged as the cornerstone of AI development, are the main sources of its competitive edge. NVIDIA has a strong competitive moat because of CUDA's deep integration into the AI ecosystem and the high cost of platform switching. NVIDIA's market position is strengthened by its strategic forays into business services, software platforms, and AI networking in addition to GPUs. I think this price drop is an alluring chance to invest in a business that is redefining computing's future, especially considering the speed at which AI usage is increasing and Nvidia's growing technological supremacy. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
The argument everyone's making is that, okay, listen, it's great, but it can't go on. It's almost over. The next phase of AI moves past the chips, past the picks and shovels, and it's time to start looking for names that are doing well with the AI technology, like a Meta. How much do you buy into that, and when does that have to show up in your portfolio? Because you still like the hardware names.
Absolutely, Charles. So as long as you're seeing surprises to the upside on the CapEx side, there's going to be surprises in earnings on the hardware place. So we like hardware still here. We think there is a lot of opportunity.
So you like Nvidia more today than you liked it yesterday?
Absolutely, especially after the CapEx announcement from Google, right? So I think as long as you see dollars flowing, you want to be there. You also do want to be on the application side as well, right? So that's in much earlier innings. Companies screen a lot more expensive here, so it's a little more speculative, but we do expect a lot of upside there as well.
Anything that you're concerned about from a policy perspective? DeepSeek came out. Some countries have put it off. Some agencies like the Navy here. President Trump talked out loud, perhaps, of maybe limiting the amount of chips that we can sell to China. Any of that stuff a worry for you long term, even though, or if it even happened, would it just be a short-term hiccup?
Well, I think right now we're viewing it more as a short-term hiccup. However, depending on how the U.S. positions itself in the long run, it could have long-term implications as well. So I do think Nvidia being restricted from the Chinese market long-term, that is a problem and limits the upside opportunity for Nvidia. However, we still have a long way to go from here.
Long way to go. Hang in there.
Producing the graphics processing units, GPUs, or processors that drive numerous AI applications, Nvidia has long been a titan in the field of AI hardware. But the emergence of DeepSeek has caused some investors to reconsider their investments, which has resulted in a sell-off of Nvidia stock, depleting the company's worth by about $300 billion. Why is this important? Simply put, business profits aren't the only factor in the AI race. Voice assistants, streaming recommendation systems, self-driving car software, and even medical advancements are powered by technologies created by firms like DeepSeek and Nvidia. Investments in AI could lead to more accessible and sophisticated innovation much more quickly than we had anticipated. Investors frequently adjust their investments in response to news of significant advancements made by a new company, such as DeepSeek. With Nvidia, this is what transpired. Fearing that DeepSeek would challenge Nvidia's hegemony in AI, some investors liquidated their shares. The fact that markets shift based on expectations rather than merely the company's recent achievement does not necessarily imply that it is having difficulties. A major factor in these changes is speculation, in which investors take on a great deal of risk and uncertainty in exchange for the possibility of large rewards. Investors frequently take action based on excitement, forecasts, or simply a fear of missing out, rather than waiting for concrete evidence that a business will prosper. Even before new technology is generally accessible, this can lead to dramatic fluctuations in stock values. Though it can also spur innovation, speculation can also result in instability. Investing in artificial intelligence, AI firms, enables them to create technology that could enhance people's daily lives. Investment flocked to internet firms during the 1990s dot-com boom, so this has happened before. While many businesses failed, some, like Google and Amazon, rose to prominence on a worldwide scale. Investment in cryptocurrencies has also increased during the last 10 years. Blockchain technology, one of its primary innovations, has since grown to be a significant component of contemporary financial and security systems, despite the fact that the hype caused many failures. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
NVIDIA to run with that AI crown. Speaking of NVIDIA, you mentioned it, shares up on that $75 billion promise from Alphabet. Separately, DigiTimes is reporting that advanced packaging capacity at Taiwan Semi is improving, and that should help ease any supply chain issues with NVIDIA's chips. And lastly, Supermicro says they are in full production of NVIDIA Blackwell racks. That's GPUs, CPUs, liquid cooling, another way to ease NVIDIA's supply constraints. So those are all just catalysts as to why you're seeing the stock up 4.5%. And Supermicro up, over 9% too.
You mentioned NVIDIA. How are you reconciling this DeepSeek news in your own mind as it relates to the stock? What you think it's worth? Are you as resolute in that belief as you were pre-DeepSeek news?
Well, DeepSeek, definitely was a shot across the bow for, American tech. And I would say most of all to a name like OpenAI. Because it really sort of put it under scrutiny. It's not enough just to raise billions of dollars from venture capitalists who have an endless checkbook and just think that you can spend, and you're going to have the best models. I think what DeepSeek showed is that ingenuity and kind of necessity being the mother of invention, and how you optimize your different algorithms to get the most out of your software can mean just as much as the NVIDIA chips themselves. So I think I saw more of a threat to the big LLMs, Anthropic and such. But for NVIDIA is such a poster child for AI in general. And so we have the double ETFs, the triple ETFs. So it just was such a shocker that it really took it down. I stuck with it because I believed it was overdone. And despite the fact that we have to work smarter at how we build these models, I don't think there's anybody who's going to pass on the opportunity to get their hands on some Blackwell chips or Rubin chips next year if they have the opportunity. So I think the order book for NVIDIA is going to show to be really strong. We've seen that with the Google CapEx guide and the Microsoft CapEx guide. So I expect NVIDIA.
Some experts are concerned that the AI sector is going through a speculative bubble because of all the hype surrounding it. When investors overinvest in an industry, prices rise above their true value, creating a bubble. The dot-com crash that followed the previous decade's boom years occurred in the early 2000s. Large sums of money were invested in numerous internet companies, but when they fell short of their promises, the markets tumbled. Could AI have the same effect? It's feasible, but AI is already being employed extensively in daily life, unlike some previous bubbles. Whether current investments reflect actual long-term growth or overly optimistic conjecture is the crucial question, not whether AI is essential. Nvidia is not necessarily losing its position in AI as a result of the share sell-off. Rather, it might be an indication of investors attempting to hedge their risks by shifting a portion of their funds to more recent firms like DeepSeek while maintaining Nvidia in their holdings.